Hi there, Serial Trader here. Let's check in with weed. And since the last video, I believe we were just on the cusp of breaking out to new all-time highs. And now we've done just that. So we've gotten above that wave 3 high that was at $44. And so far we've gone as high as $48.72. And what I have labeled here, and this count could certainly change. It could be more bullish than this, or this could be nearing a top, and it could be less bearish, or sorry, less bullish than this. But right now this fits well. So it looks like we have a 1 up, 2 down, 3, 4, and now we're potentially having an extended fifth wave, and I've labeled that 1, 2 of 5. This looks like a clear third wave up. And you see this base channel I drew with the smaller degree 1 and 2. Well, we broke out of the upper boundary line of that, so that's kind of like a visual confirmation of a third wave. And actually, we got very close to that 1.618 relationship, between waves 1 and 3 projected off the bottom of 2, and certainly got well beyond the equality relationship, which came in, right there at 44.75. So that adds some confidence that it definitely was a third wave up there of a smaller degree. And now it appears that we're pulling back in this wave 4, but it can only be labeled that as long as we don't overlap with the termination point of 1 here, which is 41.40. Now, if we get overlap, it doesn't necessarily mean that that's the top and we're heading down now. It could mean that. But it could also mean we have a 1, 2, and then another 1, 2 of even smaller degree, and this third of a third wave is just really going to extend. But again, that's a more aggressive way of looking at this, so I like to err on the side of caution. And then if you get pleasantly surprised, then great. But if you're cautious and it was warranted, at least you didn't leave too much money on the table, or you protected yourself or whatever. So that being said, I've been selling into this strength, okay, and I've had a few different exits on the way up, and actually I sold some today, not right at the top, but within a dollar or so of the actual peak. I got a good position out at that price, and the rationale for doing that was on this 15-minute price chart. And actually, I was using the 10-minute, but 15 will do here. I kind of had this shelf of support here, and I believe my now this was on stocks. I had options that I was selling, like long call options that I was selling at different points here. But as far as the actual stock position I held, I just kept, every time I'd have a pullback and make a higher low, and then start going up again, I would just move my stop up to that level, and then to that level, and then to that level, and then the most recent level it got moved up to was just under 47.12, okay? And then I said, all right, well, as long as that holds, this support level holds, and we just keep going, I'll just keep ratcheting that stop tighter. Well, finally it stops, and this stuff can't go up forever. Finally it stops going up, rolls over, and then right here, stop gets hit. You get a good fill, not right at the top, but really, like I said, within a dollar or so of the top, and then it had a real good pullback, pretty much the whole day after that initial jump in the morning. So at this point, definitely getting a little oversold here on this 15-minute, and on the 5-minute oversold, and now having a divergence, a bullish divergence. But at this point, I think it dropped almost 9% on the day, or around 9% on the day. So you want to see at least starting to turn back up, starting to get above the the T line here, and just showing some signs of life, which it isn't doing yet. So I wouldn't be in a big hurry to buy this pullback. Like if we look at the hourly chart, hourly isn't oversold. It could get there, although not necessarily. But really, I've been using the short-term time period as a guide for entries and exits. So once it starts turning back up and starts making higher highs and higher lows, you have a actual price level to define your risk against, then you can enter another long. That's what I'll be looking to do. See right now, okay, maybe it's the bottom of this pullback, but it's so close to the bottom. What are you gonna do? Put your stop, right here? The chances of being stopped out once when you're in a situation like this and it doesn't even appear to be done pulling back yet, you're just gonna keep stopping yourself out. Maybe that's okay. That's definitely a way of doing it, but I like to see at least for it to stop going down, maybe consolidate sideways a bit, start going back up, and then at least you have an actual area you can put a stop against that means something. So for now, I'm just going to wait for another entry. But certainly, this was a fantastic ride up. Very profitable for myself and some others that I know of, so that's great. Now at this point, let's put on the candlestick chart. Going in a little closer here, we actually have a bearish engulfing on the day, and that engulfs two prior real bodies. So that's a legitimate candlestick reversal signal, sell signal, and good volume on that too. And coming off that overbought RSI, and certainly RSI could come down a little more on this daily before we're back in that previous RSI support zone we've been having, which is actually on this, it's so strong. Our RSI support has been around that 60, high 50s, low 60s area. But traditionally in an uptrend, between 40 and 50 is considered RSI bull market support. And you can see right here on the daily, we haven't even actually quite gotten back down to touch that T line. So that just shows you how overextended we were above the T line. So this is actually quite normal to see this consolidation. I'll have to give the uptrend the benefit of the doubt unless we really start taking out, getting below this channel. That would be fairly bearish. And certainly getting below previous support levels would be bearish, but we're not there yet. And just looking ahead, so if we do have our 3 in place, get our 4, and we form a wave 4 that doesn't overlap with 1 here, a target for wave 5 realistically could very well be our I had that 1.32 fib target, and that was just in the low 50s there. So that's a pretty high confidence target. And then if it 52.84, so just below 53, and then if we get really exuberant, right, we have that 2.0 multiple. Now this would involve a very extended wave up, so wouldn't hold my breath, but never say never. And that would be 67.15, so high 60s. That'd be great, but we'll see. I'll be a believer as long as we can continue making higher lows and not have the overlap here. Continue impulsing up. And, okay. So that's kind of where we're at with weed. And, okay, let's go to the CGC. So this is the NYSE listing. And you can see visually it's identical. Obviously the nominal prices are different because it's in USD. But same idea. Bearish engulfing today, engulfing the 2 prior real bodies, didn't even hit the T line. Looks like highest volume ever on CGC. So we'll just keep watching this. The real trade setup would be finding support, at least starting to come back up on that shorter time frame, and all while holding above that wave 1 high. Okay, same goes for CGC as weed. So hopefully that was a good update, and maybe next week we'll present some more bullish opportunities for weed. I'm certainly watching it like a hawk because it's been very good to me lately. All right, Serial Trader signing off.